And more on what moved U.S. markets throughout the week. For that, I spoke to David Tawil. He's the president of ProChain Capital, a multi-strategy crypto asset fund. And I began by asking him if investors are being overly optimistic. Take a listen.
Potentially overly optimistic long term. Short term, we may continue to go higher. The reason for that is, first of all, dollar weakness. The U.S. dollar index has come down to levels that we haven't seen in a couple of years. What that means for international companies, let's say Apple, is that 60%, let's say, of Apple sales are overseas. When they go ahead and bring that currency back into the United States, or they convert it into U.S. dollars for purposes of their financial statements, it now gets converted at a greater value. So international companies are benefiting from a weaker dollar. In addition, we're hearing out of Trump that he may be open to naming a successor to Jerome Powell, the current Federal Reserve chair. And that would go ahead and indicate to the markets that whoever is going to be the next chair will go ahead and slash interest rates, which would necessarily make money cheaper to borrow and encourage risk investing. And so I think those two things, in addition to the elements that you went ahead and highlighted, are leading to a rally in equities, which may not stop in the short term.
I just want you to weigh in. How do you think the Canada move impacts big tech stocks, particularly, Amazon, Meta, Uber? They'll all be affected with this 3% levy.
I do believe so, there are a number of issues that are plaguing those companies. However, the Mag 7 is charging higher, and any market strength is going to go ahead and continue with and led by the Magnificent Seven, which includes the stocks that you highlighted. And so I think the market will continue to look past some of these fundamental issues that these companies can go ahead and overcome with broader growth strategies like AI focus.
We also got this slightly hotter PCE data out showing a slight tick higher in inflation. What's your sense of how the consumer is handling all of this, particularly amid a tightening labor market?
That's a great question. I am very concerned about the consumer in the United States. Remember, the upper end of the consumption strata really consumes the majority of consumption overall in the United States. But that being said, certainly the middle and lower class are being affected heavily. And tariffs have not really bore down on the U.S. economy yet. And I don't even know if we're going to get to that point, because July 9th now seems to be somewhat of an illusory date, and we're going to go ahead and get bumps out past that. But I think that, kudos to Jerome Powell, the Fed chair, saying he needs to see the data. I am very concerned about the data. We have not seen a real trend yet in the data, one way or the other. The PCE change really was marginal. I think we'll have to wait a little longer to see some more substantial moves.
Okay, and let's move on to some of the market movers that made news this week. Both FedEx and Nike released earnings reports earlier this week. How did they perform, and how did traders react?
Really incredible, I must say. FedEx came out with a sobering report. Although they beat expectations, their outlook was somewhat cool. Which it should be, frankly, based on what they think is going to be the effect from tariffs and potentially an inflationary environment. On the other hand, interestingly, Nike, which has been a really poor performer for a while, jumped on the basis of the earnings. I think it was over-shorted going into earnings, because even in earnings, Nike said, although they met expectations and exceeded, but nevertheless, they gave a very cool outlook with regard to tariffs, and they said the tariffs is going to cost the business about $1 billion. And so, that doesn't leave a particularly warm and fuzzy feeling with investors, but nevertheless, I think the stock was over-shorted and needed to be covered, and therefore led to a double-digit gain today.
And moving on to your area of expertise, only about 30 seconds left. Talk to us about Coinbase. The American crypto firm jumped to a 52-week high this week. What's behind that surge, and can we expect crypto to keep climbing?
It's incredible. The reason that Coinbase rose this week is really because of Circle, the stablecoin issuer, having IPO'd and having rocketed off the back of its IPO a couple weeks ago. And what analysts went ahead and raised the eyebrows of the market to was the fact that Coinbase actually benefits from Circle's revenue. They are Circle's largest partner and get roughly 50% of their revenue, of Circle's revenue goes directly to Coinbase. And so the market had to go ahead and reprice Coinbase based on the strength of Circle's stock.